All right, I'm Walter Susevich, Sanford Surrounded Real Estate. I'm here with Chetman with CMG Financial. We're going to do a market update. We're doing it at a local restaurant, Valenti's.
Yeah, man, it's
right?
brand new.
They've been open for
A few months.
few months. We both got the steak sandwich, but we figured we'd do these at local places, support local business, show you guys. If you haven't had a chance to try Valenti's yet, then maybe this will encourage you to get out and eat at one of your new local restaurants. But really, we want to talk about the market. We're kind of taking the premise that you have already probably seen some of the national headlines around an economic slowdown and the housing market cooling. But what does that mean in Sanford, right? And that's what we really want to dive into a little bit more.
All real estate's local.
Yeah, exactly. Because it can be dangerous to hear a headline, talking about the interest rates rising and the market cooling down and think that applies everywhere.
Right, exactly.
Right?
There's been a lot of that. Nationally, you get different trends and different data depending on where you are. Of course, the market's been so crazy and hot in the last year or two that it's got to cool off a little bit, which is not a bad thing.
No.
But I think the biggest thing I see from the lending side, Walter, is that people get out of deals for sometimes just the absolute wrong reasons. They get totally bad information, or they just wake up and panic and they're really not talking or listening to the right sources. So maybe we can dispel some myths or some untruths while we eat. And by the way, the pasta salad, I had one bite, is really good.
Is it good? Yeah, I just had a bite of that. It's really good.
Valenti's is a great restaurant, by the way. I mean, they have incredible Italian food, and their desserts are some of the best. If you haven't had any, they are some of the best desserts ever here.
I didn't have the desserts because last time when I came, I've only been once, and I had the 5-course chef sampler. Mm-hmm. So by the time I was done with that, there was no room.
Their tiramisu's the real deal here.
Oh yeah.
Oh yeah.
Okay.
But their food is awesome. The meatballs are amazing. We just went easy today with steak and cheese.
Yeah. They got a wide variety. You got pizza. You got sandwiches. You got your pasta.
Oh yeah.
Right. So
all good stuff.
Yep. So I read a statistic the other day that said 3/4 of global CEOs say we're already in a recession or we're about to be, right? And we're hearing all this, stuff about economic slowdown. First, what do you say to that? And then, what happens to mortgage rates and real estate market if we are in a recession?
Well, we probably are in a recession in the sense that we've had a slowdown in GDP. Mm-hmm. When you really look at what's going on with Ukraine and Russia, mm-hmm. and then we've had 2 or 3 years of pandemic growth where we were stimulating the economy, getting through probably the worst health crisis we ever had. Mm-hmm. And then you couple that with all the supply chain disruptions that came from the pandemic and labor shortages, because we were bound to have some issues, right? I mean,
yeah, eventually.
And they're here, it's on us, and yet we've really navigated pretty well, all things considered, because we still have great unemployment.
Yep.
I should say great employment, low unemployment. So it's kind of hard to make the absolute case for a recession when, we just added 500,000 jobs last month, which was a big deal because we were being projected less than 200,000, and suddenly you got all these new jobs in the economy. So that puts everybody in a quandary as, all right, are we going to a recession? Are we not in a recession? Because typically recessions come with terrible unemployment. Mm-hmm. We're not seeing that right now. So you got to decide where we are and what's going to happen next.
And all recessions aren't created equal, right? A really bad recession could be, big negative GDP numbers, and it could be negative 0.3%.
The textbook of the definition is 2 quarters in a row of contracted negative growth. Well, when you've had, double-digit growth, especially during a pandemic, we were bound to have a slowdown. Mm-hmm. I think what this recession is really about, in my opinion, is more about the supply chain disruption.
I think so.
Very good. Yeah. I don't think I'm okay.
Yeah, I'm good.
Some more tea? Yeah, that's sweet. Yep. Service is good here too.
Mm-hmm. Yeah.
But so I think we have to look at that and take it for what it is. I think this is a milder recession in the sense that unemployment is not the problem.
Yeah.
We really, and we'll talk about it I'm sure in a minute, we don't really have a housing recession. what we've had is a little bit of a slowdown, which probably was a little
because
bit.
we were running so fast.
Yeah, we have no inventory. And so when you can't get parts, you have problems, whether it be in a car or a refrigerator, or if you can't get a home because the inventory is so low. I mean, it creates certain conditions that we're in now.
Yep.
So inflation is just, remember this, Walter, you're a big time realtor. Inflation is the enemy of interest rates. Thank you. And so if inflation is the enemy of interest rates, and we've had a 40-year high in inflation, then we're bound to have some issues with rates. Although we've already seen some moderating of those, so we'll talk about that in a little bit.
Yep. That in past recessions, what happens, after during the recession, is that mortgage rates tend to come down, right?
That is true.
Really, the recession kind of a lot of times starts with the federal, funds rate being risen to in order to try to slow things down, unless there's some sort of crisis or something like that. But now, in the past, recessions equal declining interest rates,
Right.
For the most part.
You're exactly right, and this is where people make poor choices to get out of the market because they're panicked about it. If you watch the smart buyers, and we've been blessed to have one of our best months is going to be this August in our local Sanford office. The production was 40 or 45 loans this month, which is a lot for us. It's recessions tend to not be housing recessions necessarily, and all but the Great Recession of 2008, which was a housing crisis.
Yep.
All the rest of these recessions have been very good for housing.
Yep.
So the same thing you just said, when the Fed raises rates to slow an economy down, which sometimes puts you into a recession, typically money moves from equities into bonds, and bonds are what derives the mortgage market. And so when that happens, you see a lot of shift into things like housing commodities, and so rates typically go down. So typically we have a good refinance opportunity and we have a good buying opportunity, because one thing about most of our recessions, except for that one, is housing appreciation continues to rise even in a recession.
Yep.
It's one sector of the economy that tends to do very well when everything else is hurting.
Yep. 2001, 6.6%, increase in housing value during the recession. 1981, 3.5%. 1980, 6.1%. The only one where we had a major decrease in housing values was 2008, and that's because the recession was caused specifically by, the
foreclosure crisis.
Foreclosure crisis.
Yeah.
Yep. And to speak on a local level as well, that you see a headline that the nation's in a recession right now, or going into a recession. It can make you fearful, right?
Oh, yeah.
Right.
Sure.
Headlines can make you fearful in general, but on a local level, I've been telling people for a long time that even when this happens, that Sanford just seems so well insulated because of how much job attraction we've done, how many big job producers that we've landed that haven't even felt the the impact yet. That even if we're in a recession and declining, GDP across the nation, that locally, right, we've got so much going for us that we might not feel it as much.
True. I mean, I think job creation is the real linchpin for all growing communities, and in North Carolina, especially anything around the greater Raleigh area, the greater Charlotte area, the greater metro areas. There's 5 or 6 greater metro areas. Fayetteville's one. The growth is so robust with companies like Apple and Google and Fuji Dyson, Pfizer expanding, all the life science companies coming to our area. But when you look at all these great names, Amazon continues to grow here. It's kind of hard to say we're not going to do well. In fact, just in our local market, we've got about 4,000 jobs that are in the process of coming online. And all those people need a home.
Yep.
And the renting is really not a great option because it's just as expensive, if not more expensive, to rent if you can find an apartment. So I think on the local market, one of the things that we do a cost of waiting analysis.
Yep.
And we can do it for any market. So I pulled it before I got here in Sanford. And even right now, with the slowdown that's projected in the normal or the regular economy, we're still projecting 17% appreciation over the next 3 years.
In Sanford.
In Sanford.
Wow.
And that varies. In some markets, it's 14%. In Chatham County, it's just as high. And then as you go closer to more rural areas, it gets down to like 14 or 12. Still, 4% a year is a very robust housing appreciation. We're still exceeding that over the next 3 years. So my thoughts are, Walter, if you've got a client that's pre-approved, knows they can buy a house, gone to a lender and had everything checked out and verified, they should go ahead and buy. And what we should be focusing on is their payment and their structure and their down payment. Structuring a deal that makes sense and not be so rate driven, because I always ask if something changed by a quarter of a point worse or better, would that change? Would you get out of the market because your rate? Would you not buy the house because the rate just went up a quarter of a point?
Yeah.
Or would you have bought it earlier if it went down a quarter of a point? I think the answer should be, if it makes sense for your budget and you can do it and you're pre-approved, you should get in it. You should try. You should buy the house you love.
Yep.
Because somebody else is going to get it with all these jobs coming if you don't. And like all recessions, they tend to be some mild, some measure, but they all tend to end in 12 to 24 months, and we're probably already halfway in there. So it won't be long before you'll be really glad you did it, and you'll be enjoying that appreciation.
Yep.
And it could be even a greater value appreciation once the numbers change. Once everybody starts to get here, and again, when you can get a car with a chip in it quickly, and when you can get a refrigerator without having to order it, you're going to know the recession is over. Yeah. Because the supply chain is over. So buying now just beats everybody else to the punch.
Yeah. Everyone asks about the bubble with real estate, right? Like you mentioned cars. That's a bubble right there.
Yeah.
The pop. Inflated car prices.
Yeah.
But so one of the statistics we always look at with real estate is months of inventory, right? Balanced market, somewhere around 6 or 7 months of inventory. Sure. 6 months. Anything above that tends to be a buyer's market. Anything below that is a seller's market. You see headlines out there that inventory is rising, and that is true, right? But it's not. We were so low, right? We were just so low.
Are you seeing it coming a little bit more coming online?
Yeah,
we kind of noticed that here.
So new listings year over year in Lee County, down about 14% from last year. So people, not as many houses coming on the market, and then inventory in Sanford we actually went down year over year. So 2020. Sanford was about 1.5 months of inventory in July. 2021, 1.2, and then we're down to 1 month of inventory in 2022. And so again, this goes back to saying that you hear a national headline, don't necessarily think it's a local thing.
Don't throw the baby out with the bathwater.
Yeah. Now I will say, from a general feel, it feels as if buyers have more options now, right? You raise interest rates as much as they rose, you're going to have a smaller buyer pool. Yeah. So buyers have a little bit more options, and sellers need to be educated on what this means to them in terms of listing their home. They could get away with a lot a year ago, right? You could list your house 10% too high, and you still had multiple offers. Yeah. I call them pipe dream offers, because people had this bidding mentality where they were going to offer you what it took to not have the other guy win,
right?
Rather than what they thought it was actually worth, right? They're been based on what
a lot of psychology, human behavior in that.
Yeah, but now they got more options, and if anything, what I see people have more options with now than last year in Sanford and in Harnett County and in the outlying areas is they've got more new construction options. Yep. There isn't a whole lot more. We saw the new listings are not increasing; they dropped. About 14% from this time last year. It isn't that there's a whole bunch of existing homes available for sale, but they have more options in new construction. Yeah. And what you're really competing with as a seller is, should they just go buy a new home, or should they buy your home? Right. And they're comparing those two things more than ever.
That'll even out a little bit. Yeah. And the new inventory, that's definitely a plus in our area, because the home builders aren't slowing down as much here as they are in other areas of the world where people are concerned about a recession in housing, which I do not think we're going to have a housing recession. What we've had is a cooling off, and that's really not a bad thing, because, correct me if I'm wrong, but it allows more inventory, allows more options to buy.
It does.
And what we see now, what I've seen in our office is, instead of having like a listing have 4 or 5 offers, and we're issuing 3 or 4 pre-quals on the same property with 3 different realtor and customers. We're seeing maybe 2, sometimes just 1. We're not seeing 10 and 20% above list as much as we're seeing asking price, and now we're starting to actually see
closing cost assistance,
due diligence coming way down
Yep.
from these crazy frenzied numbers, like you mentioned, the bidding mentality. But I think it's really that seems to be more of a normalizing market than a recession.
Yeah.
Where houses are sitting a little longer, allowing less competitive offers, a more realistic offer to be made. At least that's what we see in Sanford,
Yeah.
our market.
And the key is there too is understanding that less competitive doesn't mean not competitive.
Doesn't mean easy.
Right.
Yeah.
Sellers just really got. I was listening to a podcast today that said that when the market shifts and it changes a little bit, buyers know immediately, right? But sellers,
Not always.
right? It takes 3 or 4 months for them to be like, well, my neighbor got 17 offers
6
on
months
their
ago.
house. Yeah.
The world changes.
Right, yeah. So it takes a little time, and we're going through that education process with our sellers now. Is like, I don't want you to make a bad decision on listing your house too high because you could have got away with it 6 months ago.
Right.
We have to price. It's becoming increasingly important to price listings appropriately. And to keep in mind what the competition looks like out there. 6 months ago, you list a nice house, there is no competition.
Yep.
It's like everybody's at your listing. Because it's the only.
But would you agree, though, the seller still has a great time
Yes,
right now
100%.
because it may not be as frenzied,
Yep.
but it's still a supply and demand thing.
Yep.
Like if you've got something great to sell in good condition, you've got something.
Oh yeah.
Yep.
Yep.
You just got to be a little more realistic with.
Yeah, you got to get good counsel, right? You got to
Good
get good advice on what to list your house for, what to do to prep it,
Yeah.
all those things.
What we do for you, Walter, and you know about this, is but when you bring a buyer to us, or your team does, we have this to be determined underwriting process. So if the client comes and brings all the loan documentation that we need up front before you ever show a property or even think about making an offer, we've got them already approved through underwriting, so that when they get to that perfect property that you show them and they like it, they can pull the trigger immediately. And their pre-qual letter says you are approved with underwriting approval. So you've got a loan commitment. All we need now is the appraisal and the title work.
Yep.
And we literally could close in 14 to 21 days.
Yep.
Waiting on the appraisal to come in is the longest piece of it. So there's a good way and a better way to go about being a buyer. And I think the TBD, to be determined underwriting, basically an approval without a property, is so much smarter because the other 2, 3 people you might compete with, they haven't even started yet.
Yep.
They're going to wait till Friday afternoon, don't have a pre-qual letter. It's going to be a mad scramble. They're not going to get everything in order till the next week, and your client, Walter's already going to have the offer made, and it's going to say they've been approved.
Yep.
Is everything okay
Yep.
right now?
No, everything's good.
You're not thinking anything else?
No, I think so. Yep. Thank you. Yep. We're definitely using that on a few people as well right now, because if you can communicate that to a seller or a listing agent, how valuable that is. We'll take a chance on this guy that just got his pre-qual. The lender hasn't even seen the tax returns yet.
Yep.
Go with our guy.
What do you know about him? Nothing. But our guy's been approved all the way through, so that means his credit, his income, his assets, everything's been checked out.
Yep.
Verified and documented.
Yep. And
all the other guy knows is what they said on their application.
Yep. And a good real estate agent isn't just sending in your offer blind without talking to the listing agent. They're communicating this, right?
Yeah.
So that they hear it, they feel it. We've already been through all of that, so
it's still important. I mean, like you
is.
mentioned, it's not an easy process to win an offer, but it's easier than it was.
Yep.
But if you're more locked and loaded, and knowledge is power, and you know everything about your buying power, and we know everything about you to get you approved, a guy like Walter is going to win that deal for you. He and his team is going to win that deal, even in this economy.
Yep.
And if you're a listing agent or have a listing, gosh, I mean, there's still a great chance to get a lot of money for your client.
Yep. So on a national level, those same inventory numbers I was telling you about went down here in Sanford. They went up by over 20% from April to May on a national level. So the inventory has risen over 20% on a national level, which is where a lot of these headlines are coming from.
Right.
Inventory is rising.
Right.
But we dropped, here in Sanford by over 20%.
Well,
So
a lot of jobs coming, Walter.
That's why
a
it's
lot of
super
people looking
important.
for a house around the
Yep.
Triangle area, and they're snapping them up in Sanford. So I think it's a testimony to how strong our economy is.
How well insulated our economy is from, what happens on a national level. Just because it's happening in Houston doesn't mean it's happening in Sanford.
Exactly.
Right? So, and that's a big reason why we wanted to bring you this type of video, because I don't think there are many resources out there which will give you some perspective on such a hyper local level.
Yeah.
Right.
Yeah.
Most of the time, it's the national headlines that are going to catch everybody's attention and start the Twitter wars. And,
and by the time the national media is reporting something, it's a week old.
Yep.
They just don't do a great job capturing up-to-date information in the real estate and mortgage industries. And when you see it on CNBC or you read about it, in the Wall Street, maybe not the Wall Street Journal, but when you see it on the national news at night, I guarantee you it's 4 or 5 days old. And in this industry, things change in a day.
Yep. So here's some of the national headlines. Home prices decelerate as the housing market downshifts. The cooling housing market enters the great deceleration. It's just, it's dangerous to think that, you hear this and it applies in Sanford, because it's just not the case.
Yeah.
So,
well, it's not necessarily a bad thing to decelerate a little bit. That just means we're not going up as fast in prices.
Yep.
And we're not getting quite as many offers as fast, but we don't have a lot of inventory, so this is probably a good thing.
Yep.
Doesn't mean we're like desperate.
Yep. So, and to speak a little bit about like the root cause, just to tell everybody, is a lot of people have asked me, like, why did this happen in the first place? Why did inventory get so low and housing prices skyrocket the last few years? And I know there's more than this factor, but one of the things I keep on telling people is that after the housing crisis in 2008, a lot of builders pumped the brakes.
Yes.
And they didn't build nearly the amount of homes over the last 10 or 15 years that they did any other 10 or 15 year period in our recent history.
Yeah.
So,
and I think a graph that you showed earlier.
Yep, this one right here, single family housing units completed. Yep.
I think for the last 14 years we've been below 50% of the national average of the last 75 years of the home building.
Yep.
And then there was that, what you spoke to in the 2008 crisis, was we went into a credit crisis where builders couldn't get a loan. They couldn't get financing to build houses. We got woefully behind. And now we've got this massive demand. But in our area, fortunately, we're starting to see a lot more new construction come online.
Yep.
And but it's driven by the job creation that's coming here.
Yep.
A builder knows if there are good jobs and people coming here for them, they'll find a way to buy a house.
Yep.
So we just need those rooftops to get constructed a little faster.
Yeah, for sure. So, and that's pretty much the general summary of the market report that I wanted to get across to people. But I always like to give people some action items, that if you're a buyer in today's market, what can you learn from this, right? And I think what you can learn is that, don't let the national headlines scare you. Don't feel like you're going to buy something right now and housing values are going to plummet. Everything I'm seeing, everything I'm reading, everything I'm feeling here still suggests a very strong housing market, and we're still expected to appreciate. So if anything, waiting and hesitating and not having the right counsel in terms of is it the right time to buy is going to cost you money right now. If you're ready, you should do it. And if you're a seller, now is still as good a time of any. And we're in a period where, for a year ago, I told people it was kind of it was sort of backwards, sort of a tough situation to be in, because it's one of the best times to sell your house, but then they had to go buy, and it was so tough for them to get offers accepted if they didn't have, everything in order and have the right approach. But now we're entering a time where it's still going to be a fantastic time to sell. It's going to be a fantastic time to, the builders are starting to offer incentives and compete against each other because there's more inventory out there. It's a fantastic time to build, and it's going to be a better time to buy, right? Because they're going to have more options. They're not going to have 17 offers on every property, so for sellers, it's a great time to sell. If you were one of those people who was like, man, I wish I could sell and take all that equity now, but where would I go? Now you've got options,
That's a great point that you didn't have maybe, or didn't feel like you had 6 months ago.
Mm-hmm.
And the two things that I would take away from this too is, one is home value appreciation. It will cost you more if you wait. We may probably not go up in home value as fast, which is good, because I think we hit a pretty big ceiling. I mean, just here in our area, we had like an 18% gain in prices on home value appreciation in the last 12 months, and that's not sustainable.
Yeah.
So we're probably going to see that slow down to maybe like less than 3% this year. But as I said earlier, it's going to be 17% over the next 3. So don't wait to buy because you think prices are going down. They're not going down, they're just not going up as fast.
Exactly.
Secondly, don't be so interest rate driven. Interest rates are important because they do determine the mortgage payment, but be more payment and structure focused, because listen, in the last 3 months, Walter, we went from 2.75 on a 30-year fix all the way up to 6.25 on a 30-year fix, down just a couple of weeks ago after the Fed rate was announced. The increase was to 5%, and then just last week, and this week, because now we're concerned and across the country that inflation is going to either be more contained, which would be great because as inflation comes down, interest rates get better. But then the job report came out and contradicted it and said, economy must still be good. We're not going into a recession, so rates may go back up. We went to 5.3 on that announcement just last week. Quarter point, actually a little bit more than a quarter point gain after having almost a point drop. So the point is, we can't time that market. No one can. If I knew where rates were headed for sure, I'd be a billionaire and I wouldn't be having this conversation. You guys got to stay in the game, get pre-approved tight, know who you're working with, help get a professional to navigate you through the process, and buy a house if you love it now, because it's going to be worth more later. But also, don't let the rate environment stop you if you can afford it. We'll have a chance if we go into a recession, because we just said, and it's very true, rates drop during recessions. You'll have a great chance to refinance. But also, we're at a place at 5% that the industry always wants to be. I mean, 5.5% is a very healthy interest rate market. We've just kind of been spoiled over the last 10 years.
Very spoiled.
You know? So, I mean, in 1978, when inflation was this high, in the Jimmy Carter administration, we had interest rates over 14%, as high as 18% to buy a house. We're not there and never going to go there. We're curbing inflation slowly but surely. The pandemic caused it more than anything. So, don't let home value appreciation get away from you, and don't be interest rate driven on your home buying decision. Talk to somebody like me, talk to somebody like Walter. Let us show you the payments, let us show you different ways to finance the loan, and get that house if you love it. That's my message. Don't, because I think you'll regret it if you wait a year.
I think so too. So this has been fun. We're gonna
steak and cheese is really good.
Finish this up. So Valenti's, if you haven't tried it yet, you got to get out here and try it. They got a bunch of options for everybody: pizza, pasta, sandwiches,
awesome.
Tiramisu.
Tiramisu's great. All the desserts are great.
So, and if you like this, if you got any comments or follow-up questions or anything like that, feel free to comment them below or shoot them to us. I'll put all our contact information on the screen right here. But we plan to do this once a month and give you a little bit more local specific market update, so that you're not just relying on national headlines to get your information about the housing and the mortgage market. So I'm with Chetman, CMG Financial. I'm Walter Susevich, Sanford Surrounded, who helps you with your home matters.